Cryptocurrency investors have lost billions of dollars in recent days due to panic selling in the markets. It was triggered after the world's largest cryptocurrency firm, Binance, backed out of plans to buy its rival, FTX. That company doesn't have enough money to operate. This is all leading people to pull their money and crypto. FTX was hoping that Binance could rescue it from the crisis. In a tweet Wednesday, Binance said, quote, "Our hope was to be able to support FTX's customers to provide liquidity, but the issues are beyond our control or ability to help." For more on all of this, I am joined by Jennifer Schonberger. She is a senior reporter for Yahoo Finance, covering cryptocurrencies and the Federal Reserve. Jennifer, I feel like I'm going to cling to every word you say because I get incredibly confused by Bitcoin and crypto and the rest of it. So this sounds like FTX is a kind of drowning man story. Can you explain what was happening to FTX? And is this just about one market for crypto, or is this about a larger challenge in the entire crypto space, to use a cliche used by people who buy a lot of crypto?
Good evening, John. Thanks so much for having me. What we're basically dealing with is this is a new innovative sector, crypto, but this is an old financial problem. This is essentially a run, right? We've been dealing with runs on banks and other financial institutions for years, and this is no different than that. Basically, there's been a shakedown in confidence here that is ricocheting through FTX and the rest of the crypto space. If you go back and look at what's happened, the CEO of Binance put out a tweet basically saying that Binance has lost confidence in FTX's token FTT and is looking to liquidate that. That caught investors' attention, and then people started selling out of that token. Well, guess what? That token was held by a sister crypto firm that has links to FTX, that the CEO of FTX also has a majority stake in, which led investors to start selling on FTX's platform as well. So everything fed on itself and begun to unravel. And now we're looking at a situation where if FTX doesn't get a cash infusion, they could file for bankruptcy. And people are asking if this is really a Lehman moment for crypto.
So explain what a Lehman moment is, because that's going to keep us in this good territory you started with, which is a run on the banks. People remember that from It's a Wonderful Life, and you've got your money in the bank and you go to get it and the bank doesn't have the money, and then there's panic in the streets. So what does a Lehman moment mean? And remind people of why Lehman is such a nervous-making word in the world of finance.
Right. So this is a callback to the financial crisis back in 2008. When we found out that Lehman Brothers had huge exposure to subprime mortgages and there were no banks left to bail out Lehman, Lehman ended up sinking the U.S. financial system. And so the question we're looking at now with FTX is, what are the exposures? We're in a similar area where we were in 2007, right before the financial crisis hit, where we weren't really sure how big the fault lines were, what the exposures are. Similarly here, we don't know what the exposures are with FTX. We do know that there have been major investors like BlackRock who've invested in FTX. There are pension funds that have been loading up on crypto. What are those exposures? We don't know. Right now, it doesn't seem like this is going to spill into the traditional financial system. It could remain contained to crypto and ricochet through crypto and crush the crypto space. But we haven't seen any major bank announcements saying, hey, we have exposure to FTX. But again, that remains to be seen at this juncture. So there are more question marks right now than answers.
And just quickly on that question of exposure, what happened with Lehman is you had all these people had mortgage-backed securities, which meant there were lots of different places where people were taking a loss quickly. So is that what you're saying here? The question is just how much crypto's out in the world where other kinds of institutions that might not be mysterious, quite stable institutions, might now actually be in financial trouble.
Right, exactly, John. We have to look at what's on the books of some of these other companies. Did they have investments in FTX that they now need to unwind? Were they invested in some of these illiquid tokens? And when we say illiquid, that means it's hard to sell them.
Right.
It's hard to find other sellers to buy those assets. We don't really know what the situation is. We don't know what the books look like. But the fact that Binance decided to walk away from this deal after doing its due diligence is quite eye-opening.
Wow. Jennifer Schonberger, thank you very much. You got me through it. I really appreciate it. Thanks.
Thank you so much.